Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell for Thursday, May 19th. It is 6:38 a.m. as I'm starting the video. And as always, please run that player at 1.5x. I think that's the right speed for my pace and cadence making the delivery, so keep you really efficient. Let's take a look at futures. Bitcoin down 0.6, oil down 1.25%. Stocks down between 1 and 1.5%. Nat gas down 4%. Over on the macro front, we've got jobless claims, Philly Fed, natural gas inventories at 10:30. Then over on earnings, we've got Kohl's department stores. Before the bell, I saw a news flash on that 2 executives are quitting to spend more time with the family. You know what that means. So their earnings might be out, or maybe it just was a pre-release to their actual earnings statement. We've also got BJ's Wholesale, which is Junior Costco name. And we also got Eagle Materials, which is in the home building supply chain kind of a company reporting. Then after the bell, we got Applied Materials, Palo Alto Networks, Ross Stores, and then tomorrow, Deere and Foot Locker, if you want to look ahead and do anything with those type names. Today's presentation might be one of the shorter ones in a while, not because there's nothing going on, but because I think it boils down to a couple of simple things. Before we get into that, spent a little bit of time last night pulling together some brief thoughts on kind of where we're at, and more importantly, where you're at personally with your trading. I was thinking about the guy, and if you've been around me for a while or followed my work, etc., I've told the story of this acquaintance of mine in the mid-90s. After Hurricane Andrew, there were SBA loans available. It's not like COVID where they're all free, right? That you actually had to pay them back. Well, back in the day, after Hurricane Andrew rolled through, most of the nurseries in South Florida were wiped out. So we all had to go get loans. And this one guy got a sizable loan, but then he started trading with a big chunk of his loan money, and he parlayed 250 grand into 12 million at the top of the .com era. And then 2 years later, it was all gone. He didn't take 3 million off the table and say, okay, the rest is on the house. He didn't take 6 million off. He didn't take 100 grand off. He wrote it back to zero. And then the IRS knocked on his door and said, hey, by the way, why didn't you ever pay taxes on your trading account for the last 5 years? So he not only ended up with zero, he ended up with a massive tax lien to basically, wreck his financial life. And the reason I point that out, he thought he was a trader, right? He thought he was a trader. He thought that he was the reason that the 250,000 went to 12 million. He wasn't the reason. The reason was it was a bubble. And so I think we're at a point in the market where you have to decide, have you actually been a trading tourist, or are you in this for the long haul? Because over the last 12 years, with unlimited liquidity, right? Fed, QE after QE after QE after stimulus, on and on and on, except for brief periods where there was a rug pull and you always could simply buy the dip and get bailed out, or in your day-to-day trading have junk entries that all you had to do was wait and the market would bail you out, I think those days are coming to an end. And what I'm fearful of is like a 2-year stretch where if you don't make money on the way down right now, if we are in fact heading down, no one can predict the future. But in a market where the Fed is not going to provide a big rush of liquidity and we slip into an economic recession, it's going to take a while. And the stock market may not move, trade within a narrow band as it builds a base and finally comes out of it. But my point is, it wouldn't take long if you thought you were a trader on the way up for you to give it all back on the way down. And I don't want to do that personally, and I don't want you to do that. So the only way to move forward is, how serious am I willing to take this? Am I serious about learning how to make money on the short side? Am I serious about risk control? Am I serious about my process? Am I serious about honoring stop losses? Because you didn't have to do any of that for the last 12 years. You didn't. Pick a stock, hold on. If you were wrong, it's still going to go up. All the junk stocks, the bubble stocks, the Ponzi schemes, the frauds, they're all going to be exposed. And even the good companies, a Walmart, worst day in 40 years. Target, worst day in 40 years. It doesn't matter if you're a real company or a fake company, you're getting revalued. It's just a matter of, are you taking a 50% haircut or are you taking a 98% haircut? Bubbles and frauds are going to zero or less than $5. Most of the other stocks, from what I can tell, are going back to the pre-COVID high. And if you were around just 2 years ago, everybody thought they were overvalued then, right? So we may be looking at something deeper than that. So decide how much time you want to take, or how much time you want to take with trading. How serious you want to be, and if you want to do it, it's not going to be easy, but it's definitely doable. If you look yourself in the mirror and say, you know what, I've never been comfortable on the short side. I'm not, these 3 and 4% daily moves every other day. I mean, 22 has been brutal. It has not been a piece of cake out there. You know that. So as we move into the summer, and even less people are trading, the liquidity goes down in the summer. And with this regime change from the Fed, it could get worse before it gets better. And so I think it's going to take some real discipline to stay in the game. And if you have that honest, brutal discussion with yourself in front of the mirror and decide, you know what, I'm taking the money, the vast majority of what I've made over the last 10 years, and I'll learn to be a trader with 10 grand instead of 400 grand or 2 million or whatever, however well you've done, because you can do a lot of practicing with one option contract, a lot. Or you can go on the futures and do one micro mini. You will learn to be a trader, I guarantee you, with 1 or 2 of everything instead of risking a lot of money. So that's all up to you, but just don't give it all back in this time period. What you could do is just say, you know what, I'm an IRA guy. I just want to stay on the right side of the trend. And when it's time to, I'm going to cash. We talked about that 2 weeks ago, going to cash, and I will redeploy when this thing hits rock bottom, and then I'll sit for, go back and wait for the next cycle. So, and there's no shame in either outcome. If you decide you're a trading tourist, that's fine. If you decide you want to be active, learn a process, become an accomplished trader, that's certainly fine as well. The most important part is being honest. So enough of the soliloquy or monologue, however you want to look at it. Let's look at the charts. Oscillators, right in the middle of the range, not helpful. Here's the New York, right in the middle. I mean, we couldn't be more in the middle. This thing could go up and flash the top, or we could waterfall today. I cannot tell you which way we are going to break. Vol term inversion. You can see that this 3 month to 1 month is not in the fear mode. So we got that bounce the other day, and now, obviously yesterday it moved towards fear. This 1 month versus 9 day has just been kind of bouncing along the bottom, and we've talked about the VIX in general has just not behaved as expected over the last, whatever. You don't typically see a VIX at 32 when you've had the worst day, like yesterday, 4%, the worst day in 3 years, and the VIX is at 32. Just doesn't happen. So I'm not sure what the internal dynamics are of the VIX. I think I told you the other day, a lot of hedge funds have already de-risked quite a deal, quite a bit is what I'm trying to say. So they're not trying to hedge as much as they would have been 2 months ago with a full book on the records. Bitcoin, bad day. Yeah, this is live, so it's up 2%. That's a good sign. But we dropped below yesterday, and now we're trying to make a little bit of a comeback. Today and tomorrow, get out your pencil. I think it's real simple. Are we above last Thursday's low, or are we below? You can see it here on the weekly, that needle bar that came down. We're trading right there in the pre-market. If we break last Thursday's low, which was here, what are my next big levels to the downside? 38% fib is 375, and the 50% is at 344, as I've got it drawn here. What needs to have happen is a reclaim of 410 on the weekly chart to get this thing looking a lot better. Let's move on to the daily. Here was our, it was real, but I'll call it fake anyways. The rally. I thought we would push into this area here, this resistance zone between 410 and 415, and that was wrong. Obviously, in hindsight, that was wrong. We had a reach up candle get close, and then they just liquidated it yesterday. And so here's your line, and this line has been tapped this morning already in futures. So 385 on SPY. Am I above or am I below? If you're below, then all bets are off. Anything from, just steady selling, as we've seen during some of these rug pulls, or does it go waterfall? Where when you look on an hourly chart, just big giant red bars. Look back to COVID. You'll see what I'm talking about. You know what a waterfall sell-off is. So 385 is your line. And I think you can go in $5 increments on the way up as being important levels. Can I recapture 390? Can I recapture 395? Can I recapture 400? And just work your way up like that. These gaps have all been filled. I will remove those from the charts after the video. I just wanted to show that they filled. And that's that. Now we've got another gap up here on the top, as that's how we opened yesterday. So keep 385 in focus. And then on the downside, I think you can go in $5 increments as well. We just said that that weekly 38% retracement is 375. I think there's going to be a level at 380 where there could be a little bit of a bounce, and then 375 on that fib. Weekly on the Qs, reach up candle to 310, rejected. Down we go. I mean, we're almost at that 50% fib right now at 283. I see the next level below at 260. And we could do that today. We could do that today. Yesterday was a $20 bar. We had touched 310 and we closed at 290. That's 20 bucks. 20 from 290 is 270, and you're almost there. So that would be my next downside target if we lost last Thursday's low right here at 285. You see it right here. So if you wanted to switch, I've got 290 as a bold line. You probably ought to switch that to 285. That is the number. That is the prior low. TA 101, you break a prior low, then you're probably going lower. It opens the door to more selling. Here's the 1 hour chart. You can see here this 285 where we're at in the pre-market needs to hold. Then recapturing this 292.50 is important. Then you've got a level here at 298, and then you're back up into these levels on the upside. But holding 285 today is going to be important. IWM was outperforming yesterday. It was down. Well, this is the weekly. I just want to show you these levels. Pre-COVID high, 165. I think it finds that level over time. We haven't wavered on that, right? We just talked about the kickback rally and where it might go, but we've been talking about pre-COVID highs forever, and I think you should have that line in bold. Doesn't matter if it's Home Depot, IBM, Cisco was down, what was it, down 13% last night. I don't think it's really going to matter. If it doesn't make the pre-COVID high, I think it's going to be close either way. Here we are on the daily. Basically, the 20 capped us. We came back down. I still see this little baby gap open to 172.50. In the pre-market, we were 173.50. That was the pre-market low. So have that one marked. We're at 173.50. Quite a bit lower on IWM than the others, with that Thursday low being down at 170. And us, what I'm trying to say is we're a lot higher than the other SPY and QQQ in the pre-market in relation to this low. We haven't come back to test that yet at 170. So if things stabilize here, if SPY starts to make a turn pre-market as well as QQQ, then I think IWM will advance as well. Facebook, these are closing numbers from last night. These are not live, so we're probably trading below. Watch the prior lows. Right here at like 187.50, depending on how fine you want to tune it. On a break of that, I think you go down to 180, and then for your gap fill at 175. Apple, testing last Thursday's low at the close yesterday. We're a little bit below this morning. Got to hold 140. Let's look at the daily chart. Prior low right here. Break 140. I think you come into 135 back here. And if you lose 135, then you're going a lot lower. You can see the volume over price bars get substantial here. Something around 125 for, let's just call it for starters. I know that's not really the thing. Starters on a break of 135 would be 125, but you got a big low here. Maybe that acts as support this morning at 140, 138. Tesla, focus on 700 at the prior low. At the prior low, we've got a February touch of 700. We have touch last week, or we went through it last week, but closed above 700. I would be focusing on 700 as your pivot. If you're below, I think your next line is 650. So those, I think, are the two levels. If it can gather itself, then you can see a bounce up to 760. Microsoft. We're testing the lows this morning. I didn't move this pivot. We're down here towards 250 in the pre-market. I'd key off this last week's low above 250. Bulls are hanging on by their fingernails. Below 250, we go lower. Let's look at the daily. I don't have it worked up. I think the next stop below, let's look at the weekly. Maybe I got something here. Yeah, fibs. Well, we got a 50% at 238. right here, and then we've got a larger level at 230. So if we break below 250, I'd be looking for 238 and then 230 on Microsoft. Amazon, bad day at the office, man. Down 7%. We were long. Actually talking about, oh my God, our short strikes might be too short. You know, we're going to have to roll up. That turned out to be totally misplaced. Gap down. Sent out a quick note. The trade failed in epic fashion. But this is why you get out when you get the alarm. You know, lost a lot of money from, 2350 to gap down to 2200 in 15 seconds. But if you don't get out here, you lose it all. So glad, in hindsight, glad we got out when we did. Now focus on the Thursday support zone of last week, 2100. Same thing with Google. We were long. It was looking promising. Gap down. Get out. Focus on the Thursday low at 2200. We can go out to the daily chart. Right here. I think you come into the 2100 area. Yeah, we're right at this big zone, right at 2200. We've already done the 38% retrace to 2255. I would use 2200 even as your toggle point. If you lose that, looks to me like 2025 is your next best hope at the 50% retracement level, and that lines up really well with this volume over price bar here coming across to between 2025 and 2000. Netflix underperformed, off 7%. Never could really generate anything over 187.50. Now you got to watch 170 if you really wanted to fine tune it back to this absolute low right here. But if things are selling off and you're already below 170, you got to have that one in your crosshairs. And I don't know where we are pre-market. We could be down there already. I don't know. Semiconductors. If you had this alarmed and were on top of it and weren't busy managing whatever things you had open yesterday, had a couple of nice entries. Even if you did not get this first move, a sell signal would have been generated on the entry to this gap at 233.65, and then you got an immediate gap fill down to 228. Congrats if you got that. Now today, 228 is your clear pivot. Down below, we have another gap at 224 that goes down to 221.50, and then you got the Thursday low way down here, all the way to 215, 216. So this outperformed on the way up, slightly under or outperformed on the way down as well. So there's a lot more to fall here to get to that Thursday low than the indexes or a lot of the other stocks that are already threatening to lose that prior low. So it's imperative for the bulls, if we go down, bounce off the gap and recover, to get back above that 228. Quick spin through ARC. ARC F, 1750 is your pivot. Get in below that. Thursday lows down here around 15. Just talking around numbers. Genomics, 31 is your clear pivot. 28, give or take, is your first target. Thursday prior lows. Flagship fund has a gap here starting at 41. Your target is going to be prior low down here towards 36.50. You can fine tune that on a smaller time frame chart. Down here at well, it looks like 36 was your prior low. Bulls really got to get over 44. They weren't able to do it in this consolidation range. And remember, of course, that ARC K tracks really well to Tesla. It's her largest position still, I believe. And so they tend to move together, obviously at different paces and all that kind of stuff. But it's good to have up on the board if you want to actively trade ARC K. And then ARC W, same kind of look. You've got a pivot point here at 53. And then you've got a Thursday low down at 46. So that's what we got. I'll just put it in the first person. I don't know what you did, but the mini rally proved to be a trap. Yes, there was a catalyst for that. It was, Walmart and then Target, double whammy, but a lot of stuff's been getting whacked. And you'll often see, or wonder, was that a catalyst, a true catalyst, or just an excuse, right? An excuse to sell stuff. That's an unknowable question. People sell for a million different reasons. They want to protect profits, to they're scared. Doesn't really matter why. But I thought the rally was going to be able to extend into some of those more important resistance areas. And, there's no other way to say it. I was wrong. Couple other things. If you've been having a tough time, or you're at that crossroads in your trading of whether you want to stick it out in this volatile market, we got the Memorial Day holiday coming up, not this weekend, but the following weekend, where we'll all have 3-day weekends. But it's been a tough year for everybody, from hedge fund managers all the way down to retail. Nobody has been spared. Anybody in bonds is ruined. Anybody that just has been holding on long to equities is ruined. Long-only hedge funds, etc. I think you're going to see a lot of people disappear next week and say, you know what? Even pros, I'm going to recharge my batteries. Really last chance until the summer. And if you thought liquidity was bad now, wait till next week. And so it wouldn't be a bad time, all things being considered, to take 10 days off, just clear your account, pull a George Soros, walk in, pretend you're sending a fax to Goldman Sachs, give me a price on the whole book, and boom, done. I'm out of everything, and I'm going to reset the table when I get back from vacation, or my reflection, or whatever. Now would be a perfect time to do that, where I think we're just at an inflection point, and that could be in the markets, or in your trading, or hey, I want a week to recharge, and I'll hit it the Tuesday after Memorial Day, and then go off to the races in the summer. So let's wrap it up there. Hope you're coping okay. Most important thing is honor stops and get out of Dodge if whatever you had didn't work. One last thing. Watch energy. Watch energy, because I know it's been a good sector. Maybe you made a lot of money in it. Hope you have. If the energy complex gets the sense that we're either in a recession or there's going to be one real soon, they'll probably sell off to a certain degree with equities, the broader market. Just know your game plan. I don't think that's the case. I'd like to think that energy keeps working, but it's a constant trade-off between supply and demand. I know that sounds simple, but it's true. There is no supply. Gasoline and diesel inventories heading into the driving season have never been lower. Ever. Never been lower. Refineries that are at full tilt, they are printing money as fast as they ever have. They're outperforming the market, but that doesn't mean that they can't go down if the market waterfalls. So just keep that in mind. Keep that Thursday low in focus no matter what name you're trading, and I think it all will be revealed from that level. So hope the video helped. If you're new to the channel, not going to go through the big spiel, hit that alarm button, hit the subscribe button, jump over to the show notes. There's a link to add your email. Become part of the team. That way you'll get my content morning, noon, or night. And I'll try to keep you posted as best I can on levels and what I see coming around the next corner. So we'd be glad to have you. Let's wrap it up there. This has been Chris Buss with Traders Profit Compass. Talk to you next time.